Yeah, over to you, Vikas.
Hi, good morning, all. Thank you, Mr. Yoga, for inviting me for such a great, initiative started by you in 2011. I really appreciate, and I also myself good. I always feel good to meet new people and to share my ideas with them. Uh, to start with, I'll just brief about myself. Like, I started my investing journey back in 2013. I'm a seasoned professional, and I work with multiple banks, multinational banks like Standard Chartered, Emirates NBD, Porsche Financial Services, prior to joining the Century Financials. So, since when I started this investing journey, it was like, it's very, interesting for me. Like, when I started this journey, and each and every day is a learning for me. Today, in today's topic, because we have a 20 minutes time, so I will cover about the, the topics which we have, discussed, like Mr. Yoga has discussed about the investing in global market. What are the opportunities available in the global markets? What are the do's and don'ts, and what is the perspective of the, like, what is the view? Everyone knows that, like, currently the market is down. It is, people are expecting that it is the Great Depression is coming back, and the recession is coming back. So there are many myths, there are many, uncertainties is there in the market. So first of all, we need to understand what is investing. Like, the people, I hope everyone is aware, when it comes to the investing, the conventional way was investing into the FDs, fixed deposits, and some, fixed kind of return investments, or maybe into the gold, or maybe into the land, real estates, these things. But significantly, over the period of time, the things have been changed. Currently, if you are earning in a, maybe 4% or 5% in an FD, I'm talking about in the Indian market. So the inflation is like 5%, inflation is 7%. So it is not going to meet your target, the long-term target. So why investing is important? To beat the inflation, to mitigate our, long-term targets. Suppose if we are planning, suppose our kids are going to school, if we are planning for their higher education, if we are planning for our retirement benefits, or any corpus we need to create, or if we are planning for anything in our life, so we need to have an investment strategy. We need to have an investment plans to the, on different stages of life. When it comes to the global investments, it is very interesting journey. Everyone, I hope everyone have started the investing on different parts of, like, maybe some people are investing into the Indian market, some are investing in local UAE market as well. But why it is important to invest into the global market? Like, I am here in UAE since last 2011, and as Mr. Yoga, I think you are also here in UAE from more than 20 years. So when I came in UAE, the rupee was at around 10, 11 when compared to the, the dirhams, and currently it is at a 21 level. So if the depreciating rupee, it was, suppose if I have invested 1 CR in Indian market in back in 2010, though Nifty have given multifold returns, but if I consider the rupee depreciation, so my return significantly reduced by more than 85%. So that is how, why we need to consider investing into the global markets. So currently, what are the opportunities into the global markets? So there are multiple products, like multi asset class, where we can consider investing into the global markets. Like, first, we can invest into the stocks. Like, everyone is aware about the stock market currently, it is crashing. Everyone is afraid. Like, maybe some of you are thinking that, okay, in this crash, why you are talking about the investing into the, the stock market? So yes, there is a specific many reasons why we should keep investing during these crises. If we talk about the crisis back in 1929, the Great Depression happened. If we talk about the 1987 crash, Black Friday, if we talk about the recent crash of 2000 bubble crash was there, and 2008 crash was there. significantly market has recovered from all these crashes. If we are continuously, there are two type of investors who invest into the market. One is the active investors, as Mr. Murli was speaking, that he is the aggressive investor. I hope he is doing the investment continuously into the market, maybe some intraday trades or positional trades he is doing. So there is active investor and passive investors. So it depends on our approach, it depends on our risk appetite, like how we want to invest into the market, what is our risk appetite, what is our strategy for following the markets. So currently the stocks are there to invest in the market, there are bonds, there are the ETFs are there. The talk of the town are the ETFs. Currently, if you are not able to invest particular one company or one sector, suppose if I talk about the IT, there are multiple companies who are having the exposure into the global market. Like if I talk about the Apple, if I talk about the Microsoft, instead of investing into these individual companies, because individual companies, they are having the systematic risk, which we can cannot mitigate all the systematic risk. Suppose if the US market is down 100 points or maybe 10%, so all the stocks will be down automatically globally. This is the systematic risk that we cannot avoid. But yes, unsystematic risk we can avoid when investing into the global market. Unsystematic risk like company specific risk. Suppose if Apple is not doing good, is sales is not good, if the iPhone sale is not growing up, so that is the unsystematic risk, and that we need to evaluate the company. Okay, what is the valuation, what is the PE ratio and all. So based on that, we come to the conclusion that okay, these are the ups and downs for the company, so we can invest, we should invest in this kind of company or not. So obviously ETFs are one way. Like if I talk about the numbers, last 2021 was the year for the ETFs. Last year itself, the $900 million inflows only into the ETFs has been made into the US. And globally, if I talk about, it has surpasses more than $2 billion. So that gives us a idea about like investing regularly. Like if we talk about the systematic investments, so systematic investments are regularly we need to invest, and we need to continue our investment throughout the time span which we have decided earlier when we were starting to the investments. So there are ETFs, there are stocks, and there are many other asset classes. There are commodities is there, there is NFTs, currently cryptos and NFTs are there. But we need to think one thing, like when we are investing in any asset class, we need to have some the fundamental ground and technical ground. Like what is the fundamental behind this? Like if I talk about the cryptos and NFTs, and they don't have any fundamental values. I'm not saying that okay, the investing into cryptos and NFTs are not good. Yes, people have made huge money out of investing into the cryptos and NFTs. But yes, I always suggest my clients to diversify as much as possible. Like investing some portion of your investable surplus into the stocks, some into the ETFs, some into the bonds, and maximum 5 to 10% into the cryptos and NFTs, not more than that. That is also more important. So these are some investments when people can go into the when people are planning to start their investing journey into the global market, so they can consider these kind of investments. Secondly, like when we talk about the investments, so everybody is thinking like okay, investing into the stock market, this is the common question which I came across from my clients, like okay, investing in stock market is speculation, it's a gambling. Yes, if you do without a research, without a proper plan, yes, it is a speculation, it is a gamble. But when we do a proper research, when we think that okay, we are not trading for the short term, we are investing in any company. As you take the example of Warren Buffett. When he started, like when he take over the Berkshire Hathaway in 1965, since that time and until today, continuously 20% return this company has given. That is 20% CAGR. And if I talk about the index S&P 500, it has yielded only 8.5% return. If I take the cumulative return of the Berkshire Hathaway, it is 2.8 million%, right? Where the S&P 500, it has given around 28,000% return. So this is the power of investing into the long-term perspective. So my advice, like when we start investing, do's and don'ts into the global markets, don't consider stock market or don't consider the equity market as a speculation, like overnight you will be able to build your wealth. You will invest 100,000 today and today it will become 200,000. If you are coming with that mindset, then this market is not for you, to be very honest. Yes, maybe in couple of days you can gain some amount, but one wrong trade or one wrong investments can wipe out entire capital. So we need to be very careful when investing into any stocks or any kind of equity market. So if I talk about the do's, like first we need to educate ourselves, like what is stock market, what is equity market, what is the bond market, what is the ETFs. So we need to educate ourselves, like okay, these are the particular the asset class and where I need to. So it's a huge market, and every day is a learning opportunity for us. So first we need to understand that okay, if we are investing in any company, so we need to understand that okay, these are the particular investment themes which I am targeting. This is my investment plan. Based on that, I will start investing. I can take the approach of lump sum investment. I can take the approach of systematic investment. Purely depends on my risk appetite. So based on that, like first we need to understand, where we need to educate ourselves. Second, do is like we need to diversify. Why diversification is required? Say suppose, take an example, like I have a stock, 5 stocks in my portfolio: Apple, Microsoft, Google, Amazon, and Netflix. Recently, if I had only Netflix in my portfolio, it is down more than 70%. If I had only Tesla in my portfolio, it is down almost 35% from its peak. So diversification allows us to mitigate the risk of any uncertainties. Like why Netflix was down? Because the user base reduced. Like from Russia, it is almost 600,000 user base reduced, and from globally they have reduced like around 900,000 customer base. So these are the unsystematic risk, company specific risk, which we cannot avoid, and we can only get to know about these risks when we go through the company profiling and go through their reports and all. So diversification is very important. Third thing, we need to focus on the long term investments. Like if we are considering any investment, so it need to be having a systematic approach, where there are many short term opportunities also available, but in how much amount we need to park in short term in opportunities and long term in opportunities. As I recently given an example, like for Warren Buffett, that he has made his entire wealth when he turned after 65 years, but he started his investing journey when he was 11 years old. So that we need to understand. Okay, so that is the another thing. When we talk about the don'ts, so don'ts are like it's 80% the emotions which we need to control when investing. Emotions are there are study, it is behavioral finance, where if we are able to control our emotions during the journey of investments, so it is advisable, like whenever you are investing, so keep your emotion aside and start investing into that. Like it is for saying, if I'm might be some of you are thinking that okay, it is easy to say that okay, keep your emotion, but when we see our portfolio red in 10% down or 15% down or 20% down, our emotion get hit. Yes, that is also true, our emotion get hit. But how to control that emotion? Stick to your plan, wait, as I just want to say one Warren Buffett saying, like he once said that you don't make money when you buy or when you sell. You make money when you wait. So if you wait, if your stocks are good, if your portfolio is good, if you're having the quality stocks, then you no need to worry about that. You need to stick to your plan. When we started investing journey at the beginning, we started with the plan of, okay, I will keep this stock for 5 years. But when I see a 20% drop in this share, after 1 month, I immediately start planning, okay, how I can exit to my this stock. So don't take any decision based on the emotions. So that is the don't. Second thing, don't invest blindly. If you are investing blindly, like, okay, one of my friend, he's suggesting me, okay, currently this company, particular X company is doing good, and there is an insider news, so you can invest into that. Don't invest blindly. That is your hard earned money. How you can believe on someone else's advice? Yes, there are expert. If they are giving any advice, like if I talk about the Bloomberg analyst or the Reuters or these Morningstar analyst, okay, that is understood. Okay, if a group of people they are saying, but again, listen them, analyze what analysis they are giving, but at the end of the day, put your logic, put your understanding into that. First, you need to think whether you will be able to understand this business or not. Are you whatever company you are planning to invest, you understand this business or not? So that is more important. Third thing, taking unnecessary risk into the market. So don't take any unnecessary risk into the market. Unnecessary risk means taking higher leverage on on the stocks. That is very risky. Currently there are more than 500 companies running into the markets, the local market, UAE market I'm talking about. So if you are taking the higher leverages, like if you are having portfolio of you're having surplus of 10,000 and you are taking the leverage of up to 100,000, so that is not advisable until unless you are not expert doing the leverage trades. So that is the another risk. Now if we talk about my perspective and risk in 2022, like currently everyone knows that, okay, markets are down. So how we can mitigate this risk of my portfolio is already down 30%, 40%. So what sort of investments I should be looking into that? What is the perspective? See, my long-term perspective is always it's good about the stock market. It's always great about the stock market. If I'm investing into the global market, if I'm investing into the particular industry, because whenever I'm investing is as like this is my own business. So we need to have few things in our mind when we if I talk about the 2022, there are three main risks which is we need to focus. One is the overvaluation of the stocks. So currently, why this crash happens? So the main reason people are talking about, okay, it is due to the Russia and Ukraine war, it is due to the inflation, and it is due to the interest rates. Yes, this is there, but first we need to understand the stocks were overpriced, overvalued. So overvaluation is the first reason where this 2022 we are thinking like this is the the main risk. Second thing, yes, obviously inflation. Currently, I hope you are all aware about the inflation. Inflation is like suddenly increase into the not suddenly, like when they do the quantitative easing, all the central governments they print the money. So inflation, if I talk about the US inflation, currently it is standing at 9%. It is more than that. So in order to control the inflation, they need to raise the interest rates. So they need to restrict the money supply. So when interest rates are increased, so market, it is the inverse correlation with the stock market. So when the interest rates are going high, the stock market will go down. Okay, so the definitely inflation is the risk, but currently we have seen one more, like inflation is there, the deflation, like reducing the inflation And one more things which we have experiencing, that is the shrinkflation. So suppose for an example, earlier if you used to buy a packet of biscuit with the 100 gram of quantity in, say, suppose 5 dirhams or maybe $5. So currently the same uh, biscuit packet, but reduced quantity of 80 grams, they are selling into the $5. So that is the shrinkflation. So the quantity is shrinking. So that also we need to consider when we are investing. So the other thing, like when we need to think about this perspective of 2022, that is the interest rates. So Fed is crazily increasing the interest rates because they have to control the inflation. And inflation since last 1.5 year, it is increasing, and it is not a one day task to control the inflation. Okay, so it will take some time. It will take maybe another year or two to control the inflation, because the Federal Reserve is targeting the inflation to 2%. So they are crazily, they are saying that whatever happen to the market, whatever will happen, we don't care. We are only care about the inflation. So let the market crash. So that is the another reason. And the fourth reason, which I told you that about the US, this Ukraine and Russia war, yes, that is also a geopolitical issue. So despite of these all things, one more point I would like to add, like what would be our theme of investment in 2022? The fourth point which I'm going to discuss, that is okay, despite of, like, we talk about the opportunities in global market, we talk about the do's and don'ts, we talk about the the 2022 perspective. So what would be the theme where, despite like inflation is there, we know, and we know that interest rate is going to hike. So in these uncertainties, how we invest, what kind of theme we can approach. So there are many multiple themes which we can consider investing into that. Like there are multiple stocks. The first I would like to talk about the pricing power. Like I believe the inflation will linger in the month ahead, and making it one of the biggest risk for the investors, which is facing in 2022. So that's why I would like to say that the focus should their profit margins by passing those costs along to the customers. For example, like if you talk about the Coca-Cola company, or if you talk about the Microsoft, Tencent, these are the companies which can give good returns in the longer term. Second, we need to consider the tech companies. There are three type of tech trifecta I would like to talk about. Tech trifecta means there is, I hope everyone is aware about the semiconductor issue recently entire the world. So the semiconductor industry is facing the crisis since last 2 years after the pandemic, because of the supply concern. So semiconductor stocks like TSML, the Taiwan semiconductor industry is there. If I talk about the cloud computing, the software companies. So these three, like semiconductor, cloud computing, and software companies, these kind of companies can give a good return into the these kind of scenarios. When we talk about the high inflation, when we talk about the interest rate hike, when we talk about the the geopolitical issues, so these companies we can consider investing into that. Like
Excuse me, Vikas. I
yeah,
think your time is over. Can you tell me how long it will take? Can you hear me?
I'm sorry.
Yeah. Your time is
Yeah,
over.
yeah, I can hear you.
So
Oh, okay, okay, fine. Yeah, yeah, just I'll 1 minute, I will finish. One
okay,
minute
thank you.
only.
Thank you.
Yeah, yeah. So that is the tech companies, and another is like dividend companies, where we can consider investing into that. Dividend companies is there, and there are many healthcare innovation companies. There are transportation companies which we can consider investing into that, and also we can consider investing into the EVs, which is like globally. If I talk about the Tesla, BYD, the Volkswagen, they are all coming up with the electric vehicles. And the last theme is ESG. The ESG theme is talk of the town everywhere. All the banking and financial sector, they are considering ESG, economical, social, and governance. So they have to reduce the carbon emission. So that is the last theme. So over to you, Mr. Yoga. Thank you so much.
Thank you very much, Vikas, for coming here and sharing your knowledge with all of us. Before I open the floor for questions, let me give you this certificate of appreciation.
Yes.
Thank you very much once again, Vikas. I will email this certificate to you.
Thank you, Mr. Yoga. Thanks a lot.
Okay. So questions, we have 10 minutes time. So what we will do is, in case there are more questions, and our second part of the event is networking, which starts from 8 to 8:45. So usually that introduction will be over in about 50 minutes time. So at that time, people can ask any further questions.
Sure.